All right, today's lesson is on sales promotions. Now, here's the thing. Stores want you to spend money. They want you to spend money on their stuff. So how do they get you to spend money? Well, they might have deals or sales promotions to help encourage you to spend your money. So there are some examples here. They might say, buy one, get one free. That sounds like a good deal, doesn't it? Save 30% on your purchase. Earn 10 times the points. There's loyalty programs like Triangle Rewards or PC Optimum. Do not pay for your beautiful love seat and sofa for 18 months. And your first 2 car payments are free. Those are all ways to encourage you, the consumer, we're all consumers, to go buy something. Now, those will not all work on everybody, but they will work on enough people because, well, they've been using those types of promotions for a long time, and they probably wouldn't use them if they didn't work. So let's look at a couple examples. Mervyn buys a preferred customer card at a coffee shop. The card costs him $25 a year, but the card gives him a 10% discount on his coffee. Monday to Friday, he always buys coffee, and the regular price of the coffee is $4.50. How much does he save over the course of a year? Okay, so first of all, we have to figure out how much the coffee costs a year. So, how many weeks are in a year? 52. So we're going to so he buys 5 coffees a week times 52 weeks a year, which is 260 coffees. That's how many coffees he buys a year. And every one of those coffees costs $4.50. So we take 260 and multiply it by $4.50, and we see that his daily shot of Java is going to cost him at regular price $1,170 a year. Now, because he buys that fancy card, he saves himself 10%. So we need to find out what 10% of that is. So 10% of 1,170, that's going to be, if you want, you could write it as, if you know what 10% is as a decimal, that's fine. If you're a little bit unsure, you can always just write it over 100. So 10 over 100 times 1,170. And so 10 over 100 times 1,170 is exactly $117. Now that's how much he saves, but he had to pay $25 to save that. So we have to factor that in. So he doesn't actually save $117. He actually saves $117 less the price of the card in the first place. So he saves $92 a year, even though he's paying $25 for that card, he still ends up ahead of the game. He ends up saving $92 per year. Okay, so there we go. Mervyn saves $92 per year. Nicole wants to buy a snowblower. She can buy it at Canadian Tire and receive $20 off her order in Triangle Rewards points. Points are given on the price before taxes. The snowblower is regularly $899.99 plus taxes. What's the regular price with taxes? What's the regular price with taxes? So together, your PST and your GST adds up to 12%. So if we figure out the price of this with taxes, we are going to go ahead and go $899.99 times 1.12. And just so you know, PST is 7%, GST is 5%. So altogether, it's 12%. That's where the 12% comes from. So if we multiply 899.99 by 1.12, we get $1,007.99. That's how much the snowblower costs Nicole with taxes. What cash equivalent does she earn in points? Well, she earns it on the pre-tax dollars, so we have to figure out what 20% of that is. So we have to figure out 20% of $899.99. And again, we can do that by going 20 over 100 times $899.99. So the cash equivalency would be, if you round, $180 on the nose. That's how much money she would get in Canadian Tire points on that purchase. Now, these point programs, it doesn't give you cash off right there. It would give her the equivalency of $180 in points on her account. And then she could go ahead and use those points later on. Like, let's say she wanted to go buy, I don't know, what else could you buy at Canadian Tire? I don't know, maybe you buy windshield wipers for your car. You'd be able to use the points that you have towards that purchase. Okay? Now, what is the net cost of the snowblower? The net cost is just going to be the difference between the total cost and the amount of points she earns on the purchase. So it's going to be $1,799 minus 180. And that's going to be 807, 807, the area code of where I grew up, 99. There you go. That's the net cost of the snowblower for Nicole, $807.99. That is her net. Actually, apparently, I don't know how to do math, at least right now, because it's not 807. So it's actually going to be 827. Is that better? Can someone check that out? Is that better? Yeah? Okay. So it's not the area code where I grew up. It's it's probably an area code where someone grew up, but not me. It's $827.99. That's the net cost of the snowblower. And that's it for that question. Okay? Okay. Oh. There we go. Rashawn wants to buy a TV for his entertainment room. TV costs $1,500, including taxes. Store offers a 15% discount if you finance a purchase with the store credit card. The store credit card has an interest rate of 25%. There is a no pay for a month grace period. So he gets a grace period of a month. But if he doesn't pay for it after the month, he pays interest on all the time. He pays for it 3 months after the grace period. So actually, we're just going to count the time after the grace period. How much does he save using the store card? So that actually brings up a good point. And it kind of depends on the situation. And here's the situation. When you pay late for something, like let's say the grace period is right here. Okay? And if you pay for it any time up to here, you pay no interest. Okay? But if you go beyond that grace period, okay, it depends on your card. Sometimes you just pay, like let's just say this is 15 days late. Sometimes you just pay however much time past the grace period you paid. But there are certain situations where you don't just pay for those 15 days past the grace period. You actually pay for the whole time since you made the purchase. So you have to, quote unquote, read the fine print, or ask the employee that's helping you at a store. Okay? So you have to be careful when you enter yourself into this type of situation. Now, in this situation, we did that credit card one and we assumed it was after the grace period. But for this case, let's say that we're going to assume the other thing, that it's going to start from the very beginning. Okay, it's going to start from the very beginning. Okay? So if it's 3 months after the grace period, and the grace period is a month, then actually the time that's going to be taken into account is 4 months, because that's how long after the purchase Roshan is paying us off. So what we want to do is we want to find the net cost. Does Roshan end up saving himself some money here? Okay? So we're going to figure that out. So first of all, if there's a 15% discount, the first thing we need to do is we need to figure out what 15% of 1,500 is. Okay? So 15% of 1,500 is 15 over 100 times 1,500. And that's $225. So because he uses a store credit card with that big interest rate, he saves $225. Now, he would have saved exactly $225 if he paid his bill on time. But for whatever reason, he couldn't. So he's going to pay some interest. So what we're going to see is, even with paying interest, how much money does he save? So let's figure out how much interest he pays. So A equals P bracket 1 plus R over N to the exponent NT. Now, the P here is the interesting part, because if it was a $1,500 cost and he saves $225, then we actually have to subtract that from the $1,500 to see how much he's actually paying for this thing. So that's actually $1,275. So that's how much it costs him after his discount. So we're going to put that number up here. That's how much money he's financing. And then we're using the compound interest formula just like we did for credit cards and such yesterday. So 1 plus R is 25%. And we assume 365 is the compounding, because it's credit cards or store cards almost always have daily compounding periods. And as far as what goes up here as the exponent, really it's just going to be the number of days. If there's 4 months and we assume 30 days in a month, how many days is that? 4 months, 30 days in a month. How many days is that? Four times 30 is 120. So we're going to put 120 up there as our exponent. So what we end up getting as a final cost is $1,384.18. Now, the cool thing about this is the original cost was $1,500. Even with the late payments, we still end up under $1,500. So there's still savings here. There just is not as many savings as there would be if it was paid off within that grace period of a month. So now the question is, how much does he save using the store card? Well, he saves the difference between $1,500 and $1,384.18. So it's going to be $1,500 minus $13.84.18, which should be $115.82. So that's how much Rashawn saves by using the store card.